Hi there, I'm Ross Woodfield. Welcome to Blackwell Global's daily market update. Starting off with the euro, and the pair continue to move higher as the market sentiment moves away from the US dollar. The euro also benefited from the French non-farm payroll figures, which showed improvement coming in at 0.2% quarter-on-quarter versus 0.1% expected. In other news, the ECB announced their intent to add Dutch mortgage-backed securities to their QE shopping list, which would allow them to drastically step up their asset purchases. Keep an eye on German inflation figures due shortly. And turning now to the pound, and the pair rose strongly as the market continued to take a risk-off approach to the US dollar. The Bank of England held their interest rate steady at 0.5% as expected, but subsequently stated that despite the turmoil in equity markets, their timeline for a rate hike remains unchanged. However, given the deteriorating external conditions, any delay to a rate hike would not be unexpected and would lead to pound selling. Moving on now to the Aussie dollar, and the pair was bid higher on as speculation mounts that the 69-cent handle may be the bottom of the recent falls. The Aussie also received a boost from a strong employment change result, which saw 17.4k jobs added versus the 5k expected. The rest of the week is likely to be relatively quiet for the pair as the market looks towards next week's FOMC meeting as the critical event. And taking a quick look at commodities now, and crude oil rose sharply, closing up 3.46% at $44.17 a barrel. This was a surprising result given the 2.57 million barrel increase in crude oil inventories. The rise was likely thanks to the weaker US dollar, as the fundamentals haven't changed. So watch out for further weakness in the oil price to come. And finally today, our analyst pick is the Aussie dollar. It looks to have formed a head and shoulders pattern that could signal a shift towards a bullish bias in the short term. The fundamentals are a bit shaky for the Aussie, but US dollar weakness leading into the FOMC meeting next week could see a lift in the pair. And we're looking towards the 72-cent handle as a target for this one. That's all we have time for today. For Blackwell Global, I'm Ross Woodfield. Thanks for watching.